Do you find yourself obsessively checking Bitcoin and other cryptocurrency prices every single day? If so, you're not alone. I recently did a survey asking you guys, on average, how many times a day do you check crypto prices? And over 40% of you check prices over 10 times a day. So in today's episode, I'm going to show you a process that I developed to help you stop obsessing over crypto prices and be prepared to catch the big moves. Now, I got to start with a confession. I have checked Bitcoin's price every single day of my life for the past 7 years. Yeah, every single day. I don't think I've missed a single day in 7 years, over 7 years. And for the first year, I was obsessive about it. It was like all day, every day. I just found myself constantly checking it, waking up and checking it right before I went to bed, and then throughout the day. It got out of hand. And after 2013, I got really burnt out after obsessing over crypto prices. And so I developed a strategy to help me really be prepared and not miss the big moves, but have freedom and stop obsessing and constantly checking it all the time. But let's first talk about why is it so bad to constantly be checking prices? It doesn't matter if it's Bitcoin or cryptocurrency or the stock market or, the price of gold or whatever market you're looking at. Why is it so bad to obsessively check over and over? Well, the biggest reason is constantly checking prices can lead to getting tick locked. And for anybody that's not a trader, what that means is getting locked in and letting your emotions ride on every little tick up or down in the price of a market. And what that can do is that can lead to things like over trading, where, you're watching price and you just get bored. And so you jump into a trade or you buy something just because you're obsessively looking at the market. It can also lead to over managing, right? So if say you bought Bitcoin and you're watching every little move in the price and then price starts to go down, that can cause you to freak out and sell before your profit targets. Or if price is going up and all you're doing is getting really excited about how fast and how high the price is going, that could lead you to getting mesmerized and not taking profit, not selling when you need to. And why do people do that? Why do we get so obsessed? Well, the first reason is a lack of having a plan, which is really just the gambler's mentality, right? If you're addicted and you're basically gambling, the excitement and that rush that you feel when you look at the price of a market can be really, really enticing. And so step one in getting over this and putting together a plan that actually gives you freedom while being prepared to catch the big moves is you have to create a plan. And let me show you an example of this. So what is a trade plan? Well, a plan consists of a few things. Are you going to go long or short? Basically, are you buying, right? Like here, buying, anticipating price to go up and make money as prices rise, or are you shorting? Are you going to sell the market short and make money as prices fall? The second step is, what is the setup? What is the reason that you're buying or shorting that market? And then the third is, what is your entry trigger? What price do you get in at? Or is it just random? Are you just randomly guessing at when you should buy or sell? So now that you know what a plan is, how do you go about creating one? Well, the easiest way for me to be able to do this is to actually write it down. And what I do is I post my watch lists. I actually create my plans of what I'm going to do in the future ahead of time, and I put it down in a watch list. And I basically look at the markets and I say, what are the possibilities? What are the probabilities? And what would cause me to take action, right? Price is going to go up and down, but what price am I actually interested in taking some action, either buying or selling something? And so this is an example from the beginning of the year where I was looking for a reversal pattern and basically was looking at an inverse head and shoulders here on Bitcoin around 7,500 to 8,000. And so what I did is I looked at the charts, I saw the inverse head and shoulders, and my plan of action was to buy the break of this neckline, right? So I was looking to buy around $8,000 if price could break above the 100-period moving average and get above this inverse head and shoulders neckline. And I mapped out the risk to reward, so I knew I'd be risking roughly about 10% to make at least 20%. So that fit my minimum 2-to-1 reward to risk ratio. So what I did when I posted this chart as a watch list to our community was I was indicating where that entry trigger would come from. So I knew step one, I was going long. Step two, the reason why I was looking to go long was the inverse head and shoulders, and I had a very clear price area here around 8K. And then the entry trigger would be the break of that neckline and getting above the 100% moving average. So as you can see, looking at the live chart here, price has gone up almost 30% since my entry. But the first goal, and I'm still holding this by the way, but the first goal was about a 20% move. And so what you can actually do to catch these moves is after you create your plan, step two is to set alerts. Okay. So the way that you do this on TradingView is, and one thing you'll notice here is I have this marked up, this yellow line. This would have been my alert area. So what you can do is you can just come up here and you can actually manually add price alerts. And you can do this on pretty much every trading platform and pretty much every mobile phone app, right? Like Coinbase and all the other exchanges that have mobile apps. You can set alerts. So if price goes through a certain number, you can get alerted to that fact, right? And so one thing you can do here on TradingView is we can do bar replay. So this was actually the day that I sent the alert, was I think on the 6th of January. So yeah, one day. So price was down here in the mid 7,000 range, and I had my alerts set for a little bit below 8,000, right? So I know that if we get a spike through that, I'm going to get an alert. And so when we got that spike, I get the alert, and then I can go into my exchanges and I can place orders and get into the trade that I want. So again, just to recap, step one is create your plan. Are you going long or short? What's the setup, the reason for the trade? What's your entry trigger? Where are you getting in at what price level? What's your risk to reward look like? Profit targets, stop zones. Once you have that, go into your trading platforms, set alerts. That way, if you're off working or traveling or hanging out or at the gym or sleeping or whatever, you're going to get an alert if price comes close to your entry area. And so what I'll do is I'll actually set the alerts prior to where I want to get in, right? I don't want to be alerted after the price I want to get filled at, right? I want to get alerted prior to that. So you can set, if you're looking for longs, you can set your alerts a little bit lower. That way, as price is getting close to your area, you get alerted and you can be prepared. Another option you have is to set limit orders, like stop limit orders on exchanges. So if price happens to go through that price level while you're sleeping or not able to be checking the charts, that is an option. There are risks that come with that too, which I'll talk about in another video. But at the end of the day, the main thing, guys, is making sure that you have your alerts set and your plans set ahead of time. That way it's very clear. You know what you're expecting. You're not just gambling. You're not just randomly buying and selling. So I hope this process is helpful for you. Like I said, I used to obsessively check prices all the time. Nowadays, I allow myself maybe 2 or 3 times throughout the day to just check in on prices and just see what's happening. But I know if I have those alerts set and if I know what my plan is and I know where I want to either buy or sell and the reasons why ahead of time, I'm not going to be scrambling after the fact, which is unfortunately what most people do and why such a large number of traders and investors actually lose money over time. If you have a question, feel free to leave a comment. I do my best to answer as many questions as I can. And please share this video with anybody you think would get value out of it. And look forward to seeing you in the next episode. Take care.